one of the things that I think is most unfortunate is that the check and balance in the free market against bad lending is that when you make a bad loan to somebody, the borrower goes bankrupt because they can't pay, okay? But the lender goes bankrupt because he doesn't get paid back.
Right.
All right? So this is the check and balance on bad lending in the economy, is that both the borrower and the lender go under.
Right.
We have enforced the bankruptcy for the borrower. So the homeowner loses his house, he goes under, he files Chapter 7 or Chapter 13. He's forced to reorganize. And in many cases, if he's above average income, he's forced to pay that money back through garnishments, and his purchasing power is impaired for years from that point forward. On the other hand, not only does the lender not go bankrupt, okay, and let's face it, Citibank, Bank of America, J.P. Morgan, Wells Fargo, all these guys should have gone under in this collapse because they made loans to people that couldn't pay. All right, and they should have been forced to eat every dollar of those loans.
Agreed.
If they had, they all would have gone down. But here's the problem. Not only did they not go down, but the guy who went bankrupt as a consequence of, he lied about his income on his mortgage application, okay? He deserves to lose his house because he did that. He committed a crime, and he took out a loan he couldn't pay back. He deserves to lose his house. He deserves to go bankrupt as a consequence of that. But the banker that gave him the loan deserves to go bankrupt, too, because he signed a form that said that the banker could pull his tax return and verify it, and they didn't do it.
Right.
Right?
Right.
So the thing is this. Not only does the banker not go under, but he gets to tax the borrower to make his loan good. So that bad debt never got flushed out of the system.
Right.
This is why we can't get out of the box that we're in right now. Credit creation cannot expand again because the bad debt's never been flushed.
Exactly. So we have
it's that simple.
And I talk about this all the time. We've got all these, as you said, major banks who, and really the 6,000 minor banks is what I call them, that got into this heavy risk. Again, I live in a town where you've got these big banks and small. You got the Wells, you got the Bank of America, U.S. Bank. They're all here, and then you have the local banks that were publicly traded that are, they're absolutely bankrupt. There's no other way. They're trying to raise the FDIC. Right now, the market cap is $30 million. They're saying you got to raise $130 million. I mean, how is that going to happen? We're going to reverse split and magically. Who is going to put money? The only person that would put money in a deal like that is a guy who can flip it the next day. So nothing's changed except, as you said, the little guy is getting kind of, we gave you the loan, we're going to hold you to the fire, but we're going to continue to, take a pound of flesh out of you. And in the meantime, these banks continue, but they're not lending. So here's where the stagnation is. Where I think this is where we are right now, Carl, and this may be what happens. We're at a situation where the banks aren't lending, they're not taking the losses, and the consumer is still struggling, no job, no income, can't make the house payment, can't make the rent payment. Now where?
Well, then you have the other problem that we've seen oil prices. They went to $150, which was clearly a speculative bubble. It collapsed.
Right.
We ended up down in the 30s, which was probably about the demand-adjusted price where we were at the time. Now oil has more than doubled again.
Right.
All right.
Almost tripled. Yeah. 84.
It will continue to squeeze its way higher because the commodity trade is still on. Everybody is playing this reflation thing with the dollar depreciation. The problem is everybody's on one side of that bus.
I agree.
And sooner or later somebody's going to crack in the debt default area, and when they do, people are going to go once again do what they did last year, which is scramble like crazy to try to pay off debts to avoid defaults. Yeah. And when the margin calls start, you sell whatever you own.
Right.
Because that's just how it works.
Yeah, so
you try to stay out of the poorhouse, and so you liquidate everything. You're going to see the next leg down. Now, what triggers it? Frankly, I don't know. My best guess 2-3 months ago was it was going to come out of Eastern Europe because we've known about Latvia, we've known about Hungary. There are problems over there, and they're real.
Yep.
But lately, we've seen a really odd divergence in the Nikkei market. And I'm wondering if we've got some problems with some of the big banks over in Japan. And if one of them was to blow up, it would literally blow up everything because we haven't caged the credit default swap and interest rate swap monster. That derivative monster is still out there. If you have these trading houses that are not able to make good on those bets, we got a problem. And we had a year now, a solid year, since this crisis became evident to everybody, okay? I mean, everyone said, well, we didn't see it coming. Well, I was talking about 2.5 years ago. But nobody can say they didn't see it coming after last September, all right?
Right.
So we've had a year to tell these banks, put this crap on an exchange where we have nightly collateral and margining requirements. We know what the net exposure is because we can look at the open interest and everything nets out on an exchange like you do with listed options.
Right.
We now know what everybody's capital requirements are. We know what this is. You do that for all the interest rate derivatives. You do that for the majority of the swaps. And that's where the big exposure is, okay, is in the interest rate foreign exchange side. Credit default swap market is big, but it's nowhere near what the interest rate and FX swaps are. Net all of those out. Get them on a public exchange. We had a year to do it. We didn't do it.
Right.
Now the risk is a big bank somewhere in the world that has its tentacles into this stuff explodes and we all die.
Right.
And that risk is still there. And anyone who says that it's been fixed, they're lying.